Yes, it is true that the Central Bank of Sri Lanka, CBSL governor, has indicated a likelihood of further interest rate reductions. Here's what the available information from various news reports and CBSL statements indicates. Recent rate cut. The CBSL already reduced its overnight policy rate, OPR, by 25 basis points to 7.75% in May 2025. This decision was based on lower than projected inflation and expected lower external demand. Emphasis on market rate pass-through. In previous statements, the CBSL has stressed the need for a swift and full pass-through of monetary easing measures to market interest rates, particularly lending rates, by the financial institutions. This implies that even when the CBSL reduces its policy rates, they expect commercial banks to follow suit with their lending rates to the public. The CBSL had observed some excessive outlier rates of interest on certain facilities, right balance and space to relax further. As of July 9, 2025, CBSL Governor Nandalal Weerasinghe stated that Sri Lanka has the right balance of monetary policy and that there is some space if we are to relax further. He emphasized a cautious approach, but the sentiment of potential for further relaxation is clear. Inflation targets. The CBSL is aiming to steer inflation towards a target of 5% in the medium term. With current deflationary trends easing and expected to turn positive around next month, and eventually reaching the 5% target in the next 4 to 6 quarters, this provides room for further easing, if the inflation outlook remains stable and within target. Monetary Policy Board meetings. The CBSL has a scheduled Monetary Policy Board meeting on July 22, 2025, with the announcement on July 23, 2025. This will be the next opportunity for them to review economic conditions and potentially make another decision on interest rates. In summary, based on recent actions and statements from the CBSL governor, it is indeed likely that there could be further reductions in interest rates by banks, driven by the central bank's monetary policy decisions, provided economic conditions and inflation targets continue to allow for it. Significant. Lower borrowing costs. A reduced OPR directly leads to lower interest rates on various types of loans for both individuals and businesses. Mortgages become cheaper, making housing more affordable and boosting demand in the real estate sector. Businesses find it more attractive to borrow for expansion, capital expenditure, and working capital. Increased appetite for loans. This reduction in borrowing costs encourages higher demand for credit across the economy. As the cost of borrowing decreases, more projects become financially viable, and consumers are more willing to make large purchases on credit. Higher loan books. For banks, this means an increase in the